Should I buy a rental property in 2026 if you have $100,000? If you have $50,000, $100,000, or even $250,000 that are sitting in the bank right now, and you've been thinking about buying your first rental property and you're not sure exactly how to do it, maybe you have years of frustration. I made this video to help you through that process because after spending more than 12 years in real estate, working on projects from ground up construction to fix and flip and rentals, and working with hundreds of investors across the United States, especially a lot who invested from afar, I noticed something interesting. Most people don't have a problem that looking at the information or analyzing the deal, they just can't make a decision. They have a lot of inaction and they hold themselves back. I've talked to 3 to 5 investors for the last 5 years, and every single day it's the same thing. People that are watching YouTube videos, people that have listened to all the podcasts, they're inspired. They're in the right mental state to get their first rental property. They want to make a difference in their life. They know that real estate is the vehicle, and they know that property investing or real estate in general can really help them. They're just trying to decide which direction they should go in. Those are the investors that often are the same ones that are sitting on the sidelines. And if I'm being honest, that may be you, the exact person that I'm talking to. Maybe you've been thinking about buying a rental property for 6 months. Maybe you bought some rental properties or investment properties in the past and you had a bad experience. Maybe it's been 2 full years that you've been looking at making this decision and you just haven't been able to do the right thing. A lot of people ask, how do I get my first investment property, or how should I get started in rental property investing? Should I do fix and flip, or should I try this strategy, or should I use cash that I have in my home? All these different scenarios are the same person, a person that knows that real estate's the right vehicle and has the underlying interest to want to succeed in real estate. Maybe you've been telling yourself that there's the right market and you have analysis paralysis. Maybe you're looking at interest rates or other things that are going on in the economy right now and you can't make up your mind if this is or should be the time to do it. If you feel stuck, you're not alone. A lot of investors are feeling the same way. And it's just because they don't have an individualized plan to acquire not only their first investment property, but more rental properties along the way. They don't have a tailored, individualized approach that they're confident in is going to achieve their goals. The reality is that a lot of investors are holding themselves back. They're scared of making a decision. They're afraid of making a mistake. And that's exactly what I want to talk about today. Because if I had $100,000 available right now and I was looking to make passive income through real estate, here's exactly how I would do it and how I would think about it. The first thing is buying purely based on appreciation. A lot of people look around what values are worth, where they think it's gonna go, they talk to their neighbors. That could work, right? But most of the time it doesn't. Nobody knows really where appreciation is gonna go, so I prefer to focus on what I can control. And there are different mechanisms that you can control in real estate. Cash flow, income, predictable performances, what markets, whether there is appreciation or not, and you're in a submarket, what price point you're in, and if that's going to be more of a cash flow market or not. The second thing I'd look at is trying to avoid hitting a home run. The first decision and the first deal, just get into one. There's no such thing as a perfect deal. Throughout the process, there's always going to be learning lessons, no matter what. Even going into a real deal, the first thing that we say is, look, we can only minimize risk. We can only take so much and try to reduce what can possibly go wrong. We can't control everything. You have to be willing to accept that when you make your first rental property investment and just be okay with it, okay? There's no such thing as the perfect market or the perfect financing structure or the perfect timing. The truth is that the perfect deal doesn't always exist. And while you may think or waiting for the perfect deal, someone else has been building their passive real estate portfolio without having those same thoughts in their head. Having a trusted team or a team that you know can underwrite deals and assist you or consult along the way is another way that you can get over some of these fears or indecision metrics. Someone that's gonna hold you accountable throughout that. One of the biggest patterns that I've noticed with any kind of investor or smart people that want to make decisions is that they're the victims of their own intelligence. They tend to overanalyze, They run every scenario. They consume endless amounts of information, but they don't do anything with it. They become stuck. And the action that they get or that they don't take is minimal. They might go to a meetup or talk to this. Meanwhile, someone that has way less information, who needs that income more or has more of a desire to succeed, takes action and leaves the other person behind. Now let's talk about what I would actually do if I was looking at this. If my goal was to build passive income in 2026, I would focus on cash flowing rental properties in markets where the numbers already make sense. Not where everybody wants to live, but not where all the social media is saying to invest, but where there's stable, strong job growth, where there's good blue collar type individuals, and there's a balanced market. And if I wanted to take an even lesser approach, I would look at, or a less risky approach, I would look at larger markets, huge metros that have populations over $500,000 because you have a lot more diversity. I would not look at where do I get my first property. It would be what approach should I take to achieve my goals and what market allows me to do that in a long-term aspect. We're not looking for the highest appreciation. We're focusing on markets where rents can support the purchase price and cover the debt, and there's minimal operational headaches to achieving that. Markets where you can also scale long-term with a portfolio. And one of the reasons that investors have become increasingly interested in certain rental strategies is because they can produce stronger cash flow than many traditional rentals typically do. Real estate is an amazing vehicle. You can shelter your tax burden, you have cash flow, you have appreciation, you have interest write-off, you have the ability to grow passively and recycle your cash, buy properties at a discount. It's one of the most amazing vehicles that you can grow wealth in, and it's tried and true. It's been around for hundreds of years. Here's the thing that most people are looking at. They think that all rental properties in all markets are equal, but they're not. There are different markets that perform differently. There are different neighborhoods that perform differently. There are different strategies that are going to perform differently for you. Which brings me to the framework that I use before looking at any deals. Before I buy a rental property or any kind of investment property, I ask 5 simple questions. Question 1, what market am I looking to buy in? Because a great property in a bad market can become a terrible investment. That could be anything from inventory to flooding. You just need to know the market overall and speak to people on the ground, or have a team trusted that's going to give you that advice as well. Question 2, what specific neighborhood or zip code am I buying in? Who buys here, who lives here, how much are rentals, how much are ownership? Most investors don't analyze the cities. The best investors are the ones that analyze the neighborhoods, down to the zip code difference. There's a huge difference block by block. Question number 3 that I ask myself is, what is the actual rent potential? And the way that you get that is by not looking at numbers that I hope for, not looking at seller claims, but looking at real supported data. Rental comparables that have closed, what the government will pay on Section 8 housing vouchers around there, and the actual numbers of what that's gonna look like. And then I create a profit and loss around that with expected maintenance and other things to see what I expect to perform. Number 4 is, what work does the property need today? Or if I'm buying at a discount, why? Why is this at this price versus another one? This is where a lot of investors get crushed. Unexpected renovation costs can destroy a great deal, or over finishing a deal is another common beginner mistake. Whether it's the contractors or others, you just have to be careful. The 5th question I asked is, who's managing the asset and what team am I relying on? Whether it's the contractors that we just spoke about, the property managers, the leasing and maintenance agents, or anything else, execution by your team matters, especially for out-of-state investing, because finding a property is only the beginning. Operating it successfully long-term is where the money is made. Now here's the most interesting part. Most people watching this video already know all the things that I just said. None of what I said is revolutionary or something that you probably haven't heard before, which brings us back to the real issue of buying your first investment property. It's that the issue isn't knowledge, the issue is inaction. not taking action at all. Because almost every investor equally arrives at the same question. It's not should I buy? It's not how I buy. It's not what is the cap rate. It's not what is the cash flow. These are not the questions that you should be asking yourself. The real question is, should I actually do this, and do I trust myself to make this decision? And if you've spent years researching real estate, my challenge to you is very, very simple. Stop looking for the certainty and 100% everything's going to be perfect, because it doesn't exist. There is no market where nothing can go wrong. There is no property where nothing can go wrong. There is no investment with zero risk. The goal isn't certainty. The goal is making an informed decision and executing a plan consistently that you've built with a trusted advisor. The investors who build portfolios aren't necessarily the smartest people in the room. They're usually just the people that are willing to take action and a little bit of risk after they've done enough homework. So if you've been sitting on the sidelines, like a lot of the other people that I've talked about, with capital available and still waiting for the perfect moment, maybe the better question is this: what is waiting costing you? Why do you need another year of learning? What's another year of watching videos going to do for you? And if you analyze 10 to 20 more deals, where does that put you? It puts you in the same place that you were the year before. Another year of looking or staying away from a portfolio that you could actually be building is costing you way more than you think. If you're a serious investor that wants to design a plan to build a passive income portfolio through real estate that can change your life, give you the passive income that you're looking for, and actually either replace your job or help you transition out of whatever situation that you're looking for, we structure these types of approaches every single day, and we would love to talk to you, because we're launching a cash flowing rental property portfolios every single day. Click the link in the bio, section8launch.com. Thank you for watching, and I'll see you either on our next video or hopefully on a call to talk about you taking some action together.